Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, March the 6th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market. Then we drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription service. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so quickly take a look at the news today. There's not a lot on the calendar today. There is later this week. At 10 o'clock we have factory orders. 3 o'clock we've got FOMC member Kashkari speaking. But that's about it for the economic calendar today. Just taking a look tomorrow. Tomorrow we've got trade balance for Canada and the U.S. We've got IVPMI, we've got IVD, tip economic for the major news, and then Wednesday we have housing starts for Canada. The bigger one will be ADP non-farm employment change, 8:30 building permits labor from Canada, revised non-farm productivity, revised unit labor costs for the U.S., and then 10 o'clock final wholesales, and then crude inventories. There is a bond auction, 10-year bond auction tomorrow, Wednesday at 10. Then Thursday, unemployment claims will be the big one on Thursday, and then on Friday, we've got average hourly non-farm employment, unemployment rate, so a fair amount later in the week, but kind of light for today and tomorrow. Taking a look at what's happened on Friday. Friday we opened up auction in range. We rallied up into the naked VPOC. They sold it down, went right to our target. Our main target for the day on Hypo 1 was the 74.25, which is the mid of the gap zone, and then they rallied from there, put in a higher low, rallied for a higher low, and then they just basically rallied it, coming back up into the main distribution of the double distribution day from Thursday, and then we sold off into the close, and we closed at 80.75. Overnight, inventory is net short overnight. We opened up in the 80 and 80.25, went down into the 70, tried to get back into Friday's range, rejected it, went right down. And this right here, the 68.75, is the naked VPOC and naked close, which is our secondary target from Friday on Hypo 1. And then we rallied right back up, and we've been fighting this range and sitting right inside. Now I want to show you something. We're actually sitting right pretty much in the middle of the gap zone. Where's my flex levels? Sorry, couldn't find them. So we're currently trading right now right in this gap zone here. So we have on the daily, we have a FUBAR Mr. Sneaky, and we'll take a look at on the candlestick chart. But we're trading right inside of this this gap, and we've got the 67, which is the gap fill on range, and then we've got the 63s. That is the gap fill on the naked close. And we're likely to test both sides of this gap zone today. So you're going to be opening up in an area that has not been auctioned in the in the RTH below the 74.25. So I'm expecting us to go down there and take out that naked VPOC and naked close in the RTH session, which is sitting there in the 68.75 range. But let's take one step back and take a look at what it looks like from the macro to micro. I always like to start my day with a candlestick chart, and I use a 9 EMA, 20 SMA. I start with the monthly. I'm looking for slope and separation of the two moving averages for strength of the trend where it's getting challenged, where we get continuation pattern. Beautiful upward trend on the multi-year on the monthly, challenge at the end of 15, beginning of 16. Now we've taken it back, put in new all-time highs at 24.01, and we've got this continuation pattern. On the monthly, we do not even get close to challenging the trend until we get below the 22.50. So lots of room, for a pullback on the monthly without violating the trend. On the weekly, same thing. Good, beautiful upward trend. We do have a technical gap. The gap fill will take us down to 23.28 area. Again, nowhere near even violating or challenging the trend on the weekly. On the daily, you can see we did have that FUBAR volume spike, suck all the longs in, inside day, Mr. Sneaky, and then a technical gap is created on that breakout to the 24.01, and then they come back and they close the gap, and we came down and closed the gap, the technical gap on the daily to the 9 EMA at that 69 area. If we get below 69, I would be targeting down here as a possibility, not a probability, but as a possibility down to the 44. I'm actually looking at that 43 CLVN, possibly the 41 CHVN. We'll take a look at that on the market profile chart or volume profile chart composite. Moving to the intraday, you can see that we did roll over. We closed below the 9 and the 20, came up and challenged it. This is an important aspect to this. Is we had this retest from below and failure, and we're getting a naked. We got a naked cross, which was taken out right away, and now we're below the 9 and the 20, and getting a possible start of a downtrend. Watch this this 76.25 area to the upside in terms of whether or not we see some further failure and a continuation down. Going to the 1 hour, you'll see that it again failed to hold above the 9 and 20 and coming back and now below the 9 and 20. More of a consolidation. We do have to consider the possibility of a bear flag right here, but it's not really a nice one. But the key point is we're below the 9 and the 20 on the 1 hour right now. Going to the 30-minute, you can see that we're in a consolidation mode right here. We're back above the 9. I'm sorry, back above the 20, just below the 9. Trying to get back above. They're trying to get an upward trend going, and they're having a struggle right now. And I'll be watching the 73 area if they fail below there. Going to the 15-minute, you can see that we're back below the 9 and the 20 and the 15-minute, and then on the 5-minute, we did create a naked cross, which we did basically take out almost to the tick. I consider this a naked cross, which is closed. There is another one up here, though, at 79.50. So if we get above that 76.25, that would be my target above. And then going to the 5-minute, you see that we are in a downward trend. We've got slope and separation, but we're, they're challenging it right now, but I'd be watching to see if we get continuation of this to the downside. There is a naked cross down here at the 71 area. All right, so taking a look at the composite, let me just get this out of the way. So we got lots of repair work to do. Just to put this into context, we had this consolidation and price acceptance, the microcomposite VPOC in this balance area at 64.75. We break out, then we gap up, create the island top, try to hold price at 89.50, fall back down, come down, pick up late buyers down at the VPOC, the most accepted price just before the breakout. They find them, they accept price higher, then we gap up back into the island top, accept price in around that 89, and then we gap up, price and discovery, gap up, price discovery, gap up, price discovery, accept value for 2 days up here in the 22 range, and then get continuation, 3-day balance in around the 41, and then we get the gap up again. We come up, and then we have this balance, this 6-day balance area around the 62.25. This is the major target below right now as this move down. If we can't hold this 75 today, I'd be looking for the overnight low to get taken out and close that naked VPOC and naked close down in the 68s. If we can hold above the 70, then I'm looking for a test of the upper gap zone, which has to be tested from below, which is up here in the 78.25 and 80 area. Actually, it's at the 80.75, and 80.75 is the 3-day microcomposite VPOC since being up there. But we are seeing some weakness. It's just how big of a pullback right now before we see buyers coming in and taking us higher. We need to see a much stronger failure to get into a really bearish mode and a bigger move down to come down and repair a lot of this work down there. As you can see, most of the time frames right now and the larger time frames are still to the upside. So let's just bring our Globex chart over. So overnight high, oh, did I not get rid of all these? Hold on a second, I got to get rid of these. Sorry, I thought I did this earlier. I did, but I didn't save it, and I had to close down and reboot. Okay. Our overnight high is 80.75. Right at that microcomposite VPOC, just below the naked VPOC from yesterday. Our overnight low is right down here at 68.75, right on top of this naked VPOC and just above the naked close. We have an overnight VPOC at 75. It could shift back down. It was most of the night down here at 73. So if we come down here and trade more at the 73, it's likely to shift down there. But right now it is up at the 75. So we'll put it up there and watch to see if we get a shift. Again, after this video is over, you might have to readjust that level. Nothing else. There's a LVN here at the 77.50. It happens to be the value area low, so this is going to be an important area. I'm actually using where the VPOC was, which was 77.25, up into that 77.50, and if we break above, then I'd be looking for at least a move up into the midpoint at 78.75, but I would be looking for a push. I'm expecting that we're probably going to get a rotational day if we find some buyers. If we don't see strong selling on the open and we're seeing two-way auction, I'm expecting both sides of the gap zone to be hit today. Of course, where the mid of the gap is the range low from yesterday, so we have to pay attention to this level right here. Below that, we still have the half gap close for the half gap fill of the naked close, and then targeting that overnight low down here. 70.75 is going to be a trade level for me. It's been a level that I've been watching as a possibility of failure. We failed it overnight. I was actually talking to Peter about that last night, and we were both trading last night, and said if it got down below that 70.75, then we could get a bigger move back down to the 68. I think, and this is my own opinion, that we're likely going to be back down here in the 62.75s when we come into the Fed I don't think we're going to be at these higher highs right now. I could be totally wrong, but it's something that I'm watching for, and that's why I'm watching that 75 and the failure there. So taking a look at the levels, there's that 70.75. That's the CLVN that I'm watching, and then I'm looking for that move down to the 68 and the 62. The daily ATR, the 20-period full session daily ATR is running at 1560. So off of the overnight high, our downside daily ATR target is 65 and a quarter. So we have range capabilities easily down to 65 and a quarter. That's only 10 points away for the RTH. That's easily attainable. And then our upside ATR full session 20-period target off of the low overnight of 68.75 takes us up to 84 and a quarter, which is basically going to be a breakout above Friday. And I'm going to use Friday's value area high as a level as well. And then above that, we're going to be looking for a move up into 85.50. Resistance at 91 and a quarter. And then targeting that 93 range high, and then of course above at that naked VPOC up there at 96.50. You can just note that we do have some repair work to do above as well. So a pullback, find buyers, don't know where we'll find them, and then a possibly continuation up is what we have to be looking at. Not in today, I'm talking more in a larger time frame. The big question is, how big of a retracement will we get? Is it just going to be down to the 68.75? I think it's got to be at least to the 62 and a quarter, if not greater. Next big target below, key line in the sand below is going to be 51. So that shifts down to 51. And then below the 51, I'm looking for a move down into that 43 to 41 area as the next big destination below. So what am I looking at right now? I am looking for an open auction just in range or just out of range in this gap zone. I'm looking for early movement, early rally up into testing the value area low, possibly even coming up to the overnight high in the naked VPOC at 80, testing the top side of that gap zone, finding responsive sellers, and then rotating back down, chopping between the 74 and the 77, and then failure and a move down and targeting the 68.75 is my primary target below today. That's hypo 1. Hypo 2 is the opposite of that, failure to get back into range or into value, chop, move down to the 68, okay, possibly even pushing to the 65, and then finding buyers down here and rotating us and basically chopping us inside of between the 67 and we should have that 67 in there, by the way, 67, between the 67 and the 80, and just getting a rotational day sideways. So that's hypo 2. Hypo 3 is a failure to get into the value from yesterday, even possibly opening up outer range and getting an open drive. So either an open drive or open test drive, pushing right down to the 68, chopping there, then getting continuation and failure and coming down and chopping down here in around the 62s as a pullback into this balance to see if we can find buyers. And then hypo 4 is open auction, failure to take out the overnight low in this naked VPOC, move back up into the upper distribution from Friday, chop around in here, and then push up back up into the 80s and close somewhere in around the middle of this micro composite at around the 85.50. So those are my three hypotheses. Always remember, I'm not trying to predict the market. I'm putting a plan in place for whatever the market throws at me so that I can adjust my my trading to whatever the market is showing me and have a plan already laid out with levels that I want to trade from. I want to take a quick look at gold. Gold has come back a bit. We're balancing out around that 1235. Oh, my profiles didn't stay on either here. Just let me put them back in here. Come on. I just get so frustrated sometimes with this stupid program. It's not stupid. I love it, but sometimes their drawing tools are very difficult sometimes. Okay, oh, still doesn't want to put it on. I'll adjust it later. It doesn't change the microcomposite VPOC. One more. So you can see that this longer time frame microcomposite, the balance is around 35. We've been chopping through it. 3-day is 32, 33 area. We're currently just below that. Watch this level right here at the 1230. We keep coming down here and testing it. If we don't hold it, then I'd be looking for a push down through to the 2760 and possibly back down into that 23, 22 area. You can see we came right down to the other side of that balance the other day, as we were talking about, bounced. If we get below the 2250, 23 area, this next time, do not expect them to find buyers until they get back down towards the 1860 in any abundance. I'd be looking for a pullback here. But right now we're chopping, in this 35 to 33 area. So watch, 30 area. So watch for rotations between the 35 and the 30. If we get above 36 again, look for them to push it up to the 40 and that 39. There's a naked VPOC up at 1239 on the intraday, I was looking for that on Friday, and we never got there with the bounce. We only got as high as what, 37.30, so we missed it by $1.70. Anyway, expecting a choppy day today. Didn't get a big range overnight, so expecting just rotations around that 35, which is the longer term, and we have some even longer term, older longer term value at the 31. Basically expecting chop between that area, but the key levels to watch is 36 and 30. If we get above 36, look for continuation and a push to the 40, 39, 40. Failure below the 30, look for a push down to the 27, possibly even to the 22, 23 area. So that's gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.